Hello, welcome back to this week's market update. Today is Monday, June 30th, 2025, and we'll jump right in. Taking a look at last week's market performance, both the Nasdaq and the S&P 500 hit fresh new all-time highs, shrugging off geopolitical tensions and economic uncertainty. As of Friday, June 27th, we saw the Nasdaq Composite up 4.25% last week, followed by the Dow, which was up 3.8%, and the S&P 500 up 3.4%. Moving into our economic data from last week, after cooling in both March and April, PCE inflation saw a modest uptick in the month of May. The Fed's preferred inflation metric, the PCE price index, rose 0.1% month over month, keeping the annual headline rate at 2.3%, which is up slightly from the previous month, in line with expectations, though. On the other hand, core PCE, which excludes food and energy, increased a greater than expected 0.2% for the month, up 2.7% from a year ago, exceeding forecasts and remaining well above the Fed's 2% target. Also, last week we got the third estimate of first quarter real GDP. It showed that real GDP actually contracted at a greater pace than previously expected, down about 0.5% in the quarter. This comes as things like consumer spending was revised lower, as well as investment, exports, and then government spending and imports, both about the same month over month. Imports actually helping the GDP figure slightly there, but you can see the weakness in consumer spending. That is one red flag we're taking a look at, as consumers seem to have pulled back significantly in the first quarter. But in the coming weeks, we'll be getting the first estimate of Q2 GDP, and that'll be really important to see if this trend continues. Another bearish indicator from the month of May, personal income, spending, and savings data showed that disposable personal income, which is an after-tax figure, fell a pretty large 0.6% month over month, and this is the first decrease in several years. So something we want to take note of there. On the other hand, we saw personal outlays fall about 0.1%. Now, we did have a greater drop in January, so that's not quite as unusual there, but definitely a weaker month by this data. And then lastly, we saw the personal savings rate drop slightly in the month of May as well. A more positive data point from last week, we did get the durable goods new orders data for the month of May. New orders surged more than 16% in the month to 343.6 billion. You can see a huge rebound from the decline we saw in April. It was the largest monthly gain since July of 2014, driven largely by a surge in transportation and defense-related equipment. We also got the Consumer Confidence Index for the month of June. Both the Present Situation Index and the Expectations Index fell pretty sharply in the month, continuing a longer trend of weakness in consumer confidence here. Tariffs, inflation, and labor market concerns remain top issues to consumers, although inflation expectations did moderate slightly from previous months. Last but not least, we also got some data in both the new and existing home sales markets. New single-family homes sold fell 13.7% in the month to an annual rate of 623,000, reversing recent gains and also coming in below expectations as high interest rates continue to weigh on demand. The median sales price of a new home sold in May was $426,600, about 3% higher from a year ago. And finally, in the existing home sales market, sales came in at an annually adjusted rate of 4.03 million, which was up about 0.8% from a month ago and down about 0.7% from a year ago, as inventory continued to creep up, and the median sales price rose 1.3% from a year ago to 422,800 in the month of May. So that concludes this week's market update. We really appreciate you tuning in, and we look forward to providing another update to you very soon. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.